GMO!
それではどうぞよろしくお願いいたします。まず第3四半期
This is the summary of Q3 business results. Net sales came to 112.4 billion yen. Operating profit equaled 11.98 billion yen. Ordinary profit totaled 11.76 billion yen, and net profit came to 3.78 billion yen. Net sales reached a record high, but profit lagged slightly behind the forecast as financial services had a late start in Q1. Although net profit saw a slight lag as well, tax effects will be reflected in Q4, having a positive effect. This is an executive summary of operating profit from January to September. Operating profit has decreased by about 1 billion yen to 11.98 billion yen year-on-year. Looking at each segment, Internet infrastructure has been growing. Internet finance's performance weakened this year, compared to the volatile market last year, and online advertising and media's revision to the net sales for Q1 led to a decrease in consolidated operating profit. Next is an analysis of the year-on-year growth in operating profit for July to September. Operating profit increased by about 200 million yen. Also, this time last year, Internet infrastructure came to 4.29 billion yen in operating profit and had one-off factors totaling 470 million yen from .shop and SSL sales. But this year we surpassed those figures and came to 4.49 billion yen in Q3. Looking at each segment, the Internet infrastructure segment saw very steady growth. As discussed earlier, a small increase in profit was due to the absence of the previous year's one-off factors. In Internet finance, both revenue and profit were up from last year. For the FX business, although the profitability is improving, transaction volume fell below our initial expectations due to the market environment. In online advertising and media, both revenue and profit decreased, and seasonal factors impacted both new and existing products. New ad technology products grew but were affected by weak existing media products and the change in ad network advertisement distribution regulation. In mobile entertainment, both revenue and profit decreased. We recently disclosed information about organizational restructuring. We will improve profitability through further cost optimization and by creating a system that focuses more on game development. Next is the summary of third quarter financial results. This graph shows the growth in quarterly earnings. Net sales and operating profit increased by 14.7% and 4.7% year-on-year, respectively. This graph shows net sales by segment. Consolidated net sales came to 38 billion yen. Revenue and infrastructure reached a record high of 21 billion yen and drove the group's net sales. In addition to recurring revenue from domain and web hosting, transaction revenue, mainly from payment services, led to growth in net sales. Moving on to operating profit. Infrastructure continues to perform favorably. Although there was a temporary drop in profitability in Internet finance in Q1, things are improving. However, it's still in the process of recovering due to decreased transaction volume. Incubation is the other factor that has caused net profit to rise in Q3. Here you can see an overview of profit and loss. The next slide shows the balance sheet. There have been some changes due to entering the Bitcoin mining business, so we will explain the balance sheet in the next slide along with the cash flow. We are investing in the Bitcoin mining business. Operating cash flow was minus 1.76 billion yen due to the payment of 2.7 billion yen in income taxes and expenses for Bitcoin mining business amounting to 1.5 billion yen. Investing cash flow included investments in the Bitcoin mining business amounting to 5 billion yen, so the total expenses for the Bitcoin mining business in Q3 came to 6.5 billion yen. We expect quite a bit more to be spent on the Bitcoin and mining business in the future, so we will continue to announce any updates promptly. Next, this slide shows the market cap and equity share of our listed companies. Moving on to the group overview. This diagram shows GMO Internet's 4 segments. The segment sizes are based on the net sales ratio, which between infrastructure, media, and finance is approximately 5 to 3 to 2. Our customer base is expanding across all segments, with growth in infrastructure contracts and customer accounts in FX and securities. At the end of September, the number of partners totaled 5,278 people. 44.6% of our partners are engineers and creators. The ratio of creators is increasing steadily. Our goal is to see it surpass 50%. Next is the summary of each segment. This slide shows the composition of the Internet Infrastructure segment. All products in this segment are number 1 in their respective markets. The next 2 graphs show the growth in Internet Infrastructure's net sales and operating profit for the third quarter of the past 5 years. Net sales have increased by 27.5% year-on-year, driven by payment and provider businesses. For domain and security businesses, the absence of the previous year's one-off factors has led to year-on-year losses, but the overall momentum of business is very good. Profit was up year-on-year despite an additional investment of 15 million yen in Mine. For the new business GMO payment after delivery, we have been closely watching the default rates and credit costs. It achieved positive figures in Q3 and has now entered a profitable phase. This graph shows performance by quarter. Orange shows strategic investment in Z.com, .shop, and Mine. The operating profit in Internet Infrastructure was between 1 and 2 billion yen in Q2 due to one-off costs, but exceeded 2 billion yen again in Q3. This shows the net sales for each subsegment. As you can see, net sales continue to increase. Of particular notice is the significant increase in profit in the payment subsegment due to GMO payment after delivery being incorporated on ZozoTown in Q4 last year, and the overseas subsidiary incorporated in Q1 of this year. In Internet Infrastructure, the number of contracts came to a total of 8.43 million. The increase in contracts is not obvious, as overall numbers were affected by the increase and decrease of temporary SSL sales, but the customer base is growing steadily. Moving on to Internet Finance. This chart shows historical performance of the third quarter for the past 5 years. Despite the drop in FX trading volume, net sales increased by 13.4% as we worked on improving profitability. Operating profit has increased by 6.4% as we are still investing in the cryptocurrency-related service GMO Coin, which incurred a loss of several hundred million yen. This is historical performance by quarter for the past 3 years. Profitability declined temporarily in Q1, but recovered through position management and optimization of cover transactions, as shown on this slide. While profitability is improving, we are struggling to increase the trading volume. Although our market share is still number 1, trading volume decreased by 16.9% year-on-year in Q3. This slide shows GMO Financial Holdings' major KPIs. Trading volume decreased in Q3, but the customer asset balance is increasing steadily. We will continue to expand our customer base and improve our services. Next is the cryptocurrency-related business, managed under GMO Coin. For our cryptocurrency business, which launched on May 31st, customer accounts and trading volume are growing rapidly, and we are now handling altcoins such as Ethereum and Litecoin, in addition to Bitcoin, as shown on this slide. On September 30th, GMO Coin was officially recognized by the Japan Financial Services Agency as a registered cryptocurrency exchange business. Our goal is to see GMO Coin and our Bitcoin mining business drive the cryptocurrency revolution in the future. Next is online advertising and media. This chart shows historical performance of the third quarter for the past 5 years. Net sales decreased by 3.8% year-on-year. There was a drop in the sales of existing products in online media due to changes in ad network advertisement distribution regulations, resulting in a reduction in revenue. For online advertising, ad tech products grew through ad technology shifts, but net sales decreased due to the decline in ad placements by certain customers. A drop in net sales of high-margin media products led to a decrease in profit. This slide shows performance trends by quarter. Despite continued progress in our ad technology shift over the past few years, seasonal factors are still impacting both new and existing products. We will continue to strengthen our in-house products. Shown here are each segment's revenue trends by quarter. Net sales of our in-house ad technology product Akane doubled to 700 million yen year-on-year, but the segment's net sales have been flat due to the decline in ad placements by certain customers. Moving on to mobile entertainment and other businesses. Group companies at the core of the mobile entertainment segment will be merged into GMO Internet through organizational restructuring, which will take effect on December 1st. The purpose of the merge is to further cost optimization and to create a system that focuses more on game development. As for our current pipeline, we are planning on releasing a new title in Q4. In our incubation business, we posted a gain via sales of listed shares that went public in 2016. That concludes my part of the presentation. Thank you for listening.
続きまして、グループ戦略について GMO インターネットグループ代表の熊谷よりご説明させていただきます。
どうぞよろしくお願いいたします。
Good afternoon. .shop domain renewals will begin at the end of September. The list of domains renewed will be determined 45 days after the end of the month, so we currently cannot disclose accurate renewal rates. We will disclose the figure in the next results presentation. .shop domains have been registered in 182 countries, and more than 60 e-commerce platforms are using them. Other businesses seem to use various methods such as offering free installations to increase the number of domain registrations, whereas we have grown our customer base mainly through partnering with e-commerce businesses that will continue to use our .shop domains. These are our customers using .shop domains. eBay, Amazon, Nike, and iPhone are using .shop domains to redirect to their conventional websites. More and more major e-commerce sites worldwide, such as Golf Digest and Nintendo, are using .shop domains. .shop will become an important source of profit next year. GMO Internet Group will continue to provide information about e-commerce sites that are expanding worldwide. Next is finance and payment. Developments in each area are continuing to progress steadily. The parent company of the new internet bank decided to change its name from Aozora Trust Bank to GMO Aozora Net Bank, which was approved by the FSA on October 25th. The new name will be effective from June 2018, and the internet bank will be launched the following month. We will pursue a convenient number one technology bank by utilizing the strengths of Aozora Trust Bank, Aozora Bank, GMO Internet, and GMO Financial Holdings, and through the integration of finance and information technology. We will initially provide convenient services at a low cost to business and individual customers of GMO Internet Group, which include products developed with partner securities firms and those tailored for e-commerce businesses, such as deposit and exchange. We plan to promote open banking strategy, which focuses on developing a platform for financial services by utilizing open API and forming alliances with fintech firms with an aim to become the number one technology bank. We are preparing for the launch of operations such as the system for development, planning, and marketing, and workflow. So please be expectant about our endeavors. Next, I would like to talk about our global strategies. GMO Internet Group has already expanded to 58 locations in 20 countries and includes 1,200 global partners. GMO Financial Holdings develops Jet.com securities in Thailand, a country that has the highest securities trading value in the ASEAN region. As an online securities corporation, it launched financial trading services this month in Thailand. It has acquired an internet securities license in July and will launch the business on November 20th. The infrastructure business, which offers services under the Z.com brand, has made a start in Southeast Asia, but we have the impression that the internet has not yet spread in countries throughout this region. Today, our customers are mainly large enterprises rather than SMEs. We have contributed to the expansion of the availability of internet services in Japan. We will contribute to the development of abundant internet services in Asia by utilizing our strengths. Next, I'll share about our new challenge, a Bitcoin mining business. GMO Internet Group has done business for 21 years until now as a group which comprehensively develops mainly internet infrastructure services. We have been providing internet infrastructure services that eliminate the boundary related to information from the world, changing the way not only country and business but also the world work. Although a certain amount of information has been controlled before the internet has grown, information is now instantaneously transmitted worldwide once it is provided. Information is now transmitted properly and compared easily, and a product is selected based more on price or performance than on sales, which has encouraged us to engage in fair business practices. Similarly, cryptocurrency eliminates the boundary related to money, and the result is that it is likely to change the way currency, financial services, and the world are. I'd like to discuss the cryptocurrency by comparing it with legal currency. Firstly, for legal currency, the source of credibility is a country or a central government, whereas for major cryptocurrencies, their credibility is secured by blockchain technology and mutual monitoring by blockchain network participants. Secondly, for legal currency, there is no cap on the amount issued, whereas for Bitcoin, the cap is 21 million Bitcoins. Thirdly, for legal currency, the method of issuance is mintage, whereas for Bitcoin, it is mining. We will discuss the Bitcoin mining business later on. There are about 1,000 types of cryptocurrencies in the world. One is Bitcoin, which has the highest market value. The exchange of Bitcoin is established by recording transaction data on the blockchain, which is not managed by any individual and is distributed and saved on the network, as there are no actual banknotes. The blockchain is distributed and saved on the network, through which data fraud is prevented. This has allowed Bitcoin to grow. Bitcoin's market value has been on the rise. Its market value has exceeded 800,000 yen as of today, and its market capitalization stands at 13.4 trillion yen, which accounts for about 60% of the cryptocurrency's market capitalization. If you look at these figures, you'll notice that Bitcoin has grown dramatically over the past 2 years. Bitcoin is stored in e-wallets. Over the past 2 years, the Bitcoin's market capitalization has increased 24-fold due to approximately 4-fold increase in the number of wallet users and the increase of the amount of Bitcoin issued. Before moving on to the Bitcoin mining business, please watch the video about the concept of Bitcoin mining. As shown in the video, cryptocurrency miners worldwide compute recording transaction data in the blockchain, and the first miner who has calculated will be granted cryptocurrencies. This process is called mining. This process is conducted every 10 minutes. 144 blocks are generated each day. Revenue from mining is 12.5 bitcoins per block. Accordingly, the total revenue from mining is 1,800 bitcoins per day, which is equivalent to 1.4 billion yen, calculated based on the bitcoin's market value of 800,000 yen as of today. Miners' total revenue has increased about tenfold over the past 2 years. Increase in Bitcoin's market value has led directly to increase in revenue. Computational power is called hash rate. This chart shows hash rate trends. The Bitcoin's total hash rate has come to 8,500 petahash per second in October, and as of today, it is growing to 10,000 petahash per second. Computational power has increased about 18-fold over the past 2 years. Bitcoin's total mining abilities have risen rapidly due to the increase in the number of miners. We will briefly discuss the revenue structure of Bitcoin mining business in this market environment. If you look at this slide, you'll easily notice that our Bitcoin mining business is made up of extremely simple KPIs compared to various other businesses I've run over the past 21 years. The business can be factorized into very few parameters. I think the revenue can be easily calculated by analysts and investors. This is the formula of revenue per day. For example, if the market value of Bitcoin is 100,000 yen, the annual revenue is 65.7 billion yen. 1,800 Bitcoins times 100,000 yen times 365 days equals 65.7 billion yen. That's about 66 billion yen. The market value of Bitcoin is 800,000 yen as of today, so the miner's total annual revenue is 530 billion yen. If our computer's total hash rate accounts for 10% of Bitcoin's total hash rate, annual revenue in our Bitcoin mining business will be 53 billion yen. The revenue structure is pretty simple. Electricity, labor, and depreciation comprise the cost. Cost structure depends on countries. For example, electricity cost is relatively high in Japan, so the profit margin is relatively low, whereas the electricity cost in Northern Europe, where our facilities will be built, is about a third or a quarter of that in Japan. At the current market price for Bitcoin of 800,000 yen, the electricity cost accounts for about 5 to 10% of the revenue. The total cost accounts for about 30% of the revenue, so the profit margin is expected to be about 70%. We announced in October that we expected the computational power to reach 500 petahash per second in the spring of 2018. 500 petahash per second would be equivalent to about 6% of 8,500 petahash per second. This was our expected market share. For example, at the market price for Bitcoin of 800,000 yen, we expected that the annual revenue in our Bitcoin mining business would be 6% of 530 billion yen. We have recently revised our expectations to 1,500 petahash per second. This is equivalent to about 50% of 8,500 petahash per second. The total hash rate is currently growing, so the average market share may be about 10%. The total hash rate is expected to reach 20,000 petahash per second at the end of 2018. We're planning to achieve an average market share of about 10% in 2018. If the average market price of Bitcoin in 2018 is 800,000 yen, the miner's total annual revenue will be 530 billion yen, so theoretically, the annual revenue in our Bitcoin mining business will be about 53 billion yen. Theoretically, the profit margin will be about 70%, so the annual net profit in our Bitcoin mining business will be about 30 billion yen. This term, our net profit is expected to reach 19 billion yen. We expect that an additional 30 billion yen will give rise to the rapid growth of GMO Internet Group. This slide shows the Bitcoin's total hash rate in October. The Bitcoin's total hash rate fluctuates, ranging between 8,500 and 10,000 petahash per second. We announced in October that we expected the computational power to reach 500 petahash per second in the spring of 2018. We have recently revised our expectations and are now planning to achieve a computational power of 1,500 petahash per second in August 2018 with in-house mining boards. Please watch the video about the mining board we're currently developing. As shown in the video, we will launch a machine equipped with cutting-edge 7nm semiconductor chip in next fiscal year. There are no 7nm semiconductor chips out there yet. We're jointly developing this chip with our alliance partner. Now that the provision of this chip is within reach, we have decided to enter Bitcoin mining business. This model has computational performance of 10 terahash per second. Its power consumption is the lowest in the world. The electricity consumption of each of our chips is less than half of that of the competitors' products, so we will be able to ensure advantage in electrical efficiency. Although future plans are not determined, in January 2018, we will launch the mining based on ready-made mining computers in Northern Europe. We believe that this business will start generating revenue on the day we launch the mining. We're planning to launch the mining based on our own chips in the first half of the fiscal year 2018 and next-generation 7nm mining chips in the second half. We're planning to announce the exact date of launch and the details of the investment, so please be expectant about our Bitcoin mining business. This slide shows 3 new businesses in the Bitcoin mining domain. Firstly, our own mining business will be launched, and the facility will be increased stepwise while confirming the stable operation and the performance. We're planning to achieve a computational power of 1,500 petahash per second in August 2018 with in-house mining boards. Secondly, although the exact date of launch is yet to be decided, we will launch the cloud mining business in next fiscal year based on the achievements in the in-house mining. Customers can use our mining capacity like a cloud server. Lastly, we will sell our chips as shown in the video. This will enable us to meet the needs of those who want to mine at home. We want to sell our 7nm semiconductor chip to users worldwide. We're considering the token sale using ICO to sell the chips. We want to launch the token sale after considering properly the Payment Services Act and other laws and regulations related to financial instruments transactions. We will consider the interests of token purchasers and stakeholders. We're planning to announce the details soon. As shown in the slide, there are 4 risks to the Bitcoin mining business. Firstly, we will be able to ensure advantage in cost and electrical efficiencies despite the harsh competitive environment. Anyone can mine Bitcoin. We must minimize electricity costs and develop high-performance mining boards. Finding a region with inexpensive power supply is difficult. It is also difficult to cultivate the expertise through operating facilities. Developing a semiconductor, above all, is extremely difficult. We want to conserve our strength with these three advantages. Secondly, sharp decline in Bitcoin rate may pose risks. If the rate declines, the miners may run a deficit. The lower the performance of the machine, the higher the electricity cost, and the more likely are the miners to run a deficit. We do not have to turn off our machines unless Bitcoins disappear. This is because we will use a machine equipped with cutting-edge 7nm semiconductor chip, and its power consumption will be the lowest in the world. Even if Bitcoin rate declines sharply, we will survive until the very end as we're building our facilities in a cold region with the least expensive power supply in the world. We may have to turn off our machines if the Bitcoin's market value falls below 50,000 yen. However, the competitors will turn off their machines before we do, so we expect our market share to increase. Therefore, we will be able to reduce this risk. Thirdly, the regulation of the use of Bitcoin. The amount of issued Bitcoin and the number of users are increasing, so Bitcoin is becoming a strong borderless currency. For example, China has announced the regulation of the use of Bitcoin, but the Bitcoin rate has been rising. Accordingly, it may be extremely difficult to prohibit using Bitcoin all over the world. Despite the regulation of the use of Bitcoin, our Bitcoin mining business will be able to generate revenue. Lastly, mining methods may be disabled or changed. The probability is quite low. There are lots of miners, so the protection of specification before the change is expected, as in the case of Bitcoin Gold. The risk is, again, quite low. As shown in this slide, there are mainly 4 risks to the Bitcoin mining business. We will be able to reduce all the risks as we're developing our own chips and building our facilities in a cold region with the least expensive power supply in the world. We're coming to the end of the third quarter presentation. We will aim to become number 1 in the field of cryptocurrency. We have been working in the internet industry for 21 years. Cryptocurrency may change the world similar to the way the internet enriches our lives. We'll offer cheap and easy-to-use services to everyone to challenge ourselves in new ways. We will supply GMO Coin, a cryptocurrency exchange and trading service, with mined Bitcoin, offering transaction opportunities. GMO Coin is currently our domestic business, but we would like to offer services worldwide under the Z.com or Z.com Coin brand. Based on the overseas market's reaction, we will supply the mined Bitcoin worldwide under the GMO Coin or Z.com Coin brand. We want to put payment, remittance, and other services utilizing the blockchain technology into practical use so that the Bitcoin will be used in services closest to us. We'll show our strength so that we can be the number 1 player in the field of cryptocurrency. That concludes our third quarter presentation. Thank you for your attention today. Internet for everyone.